And when we raise capital, we do syndications, right? So the critical tax considerations for GPs, they should be aware of early on. Any kind of light you could throw on that? Yeah.
Well, yeah, I mean, look, there's all different kinds of strategies, and for the GPs, they're typically going to be active. They're both active in the entity,
Yeah,
and if they
very active.
qualify, if they qualify as a real estate professional,
Professional. Yeah.
then they're going to be able to really use all of the benefits, all of the depreciation benefits
Yeah.
of the syndication, right?
Mhm.
Now, the limited partners, the passive investors, they've got a little
Yeah.
bit of a different situation. They can use the losses passed through on their K1 to offset net rental income from other rental investments they have, either their
Yes.
rental
Mhm.
properties or maybe they're in some other syndications that are throwing off rental income now, right?
Sure.
They can also use it to throw off or to deduct against capital gains from real estate. So let's say
Yeah.
I just got out of a syndication and it got sold and I've got a big gain. Now I can
Mhm.
use losses from a new syndication investment to offset the gain from my old syndication investment.
Yeah.
So it's sort of like a
Beautiful.
ladder, right?
Yeah.
You're basically using new investments to offset gains from old investments, right?
Excellent. Excellent. And we can accumulate them too, right? If we don't have passive gains in a particular year, we can accumulate that negative K1, which I say, losses,
Yes.
negative. Yeah, the losses can be accumulated for how many years? I was told many, many years. Is that right?
I mean, it's basically unlimited. You're not gonna. I mean, in a syndication structure, you're not. Your passive loss carryover isn't gonna die because you didn't get out of the syndication fast enough.
Yeah.
You're in for 5 or 7 years. So that's true. Your passive losses that you cannot deduct in the current year get
Yes.
carried over
Carried over.
until one of two things happens. Either you have income to offset it,
Yeah.
right? Right?
Hmm.
Or the entity that you have the losses from is sold. At which
I
point
see.
you get to use the passive losses from the current deal,
Accumulated. I
the
see.
accumulated passive losses in the year of the sale of the property.
Oh, wonderful. So this is new to me. Oh, so when we sell, we could deduct that loss as a line item. Is that right? It will be like one
Correct.
of the, ah,
Yeah.
wow.
Let's say, for example, as a passive investor, I've accumulated $50,000 worth of losses I couldn't deduct. Right
Hmm.
now, you sell the property, and I get a K1 for $100,000 capital gain. Well, I don't
Yes.
have to pay taxes on 50,000
Yes.
because I have the $100,000 gain, but I also have the $50,000 deduction that I haven't
Yes.
used,
Hmm.
right? So now
Okay.
I'm net 50,000 on that, right? And I'm really happy
Beautiful.
because I made money, right?
Yeah. It's so true, so true. I mean, this is so exciting. In not stocks, you can't do it because if you lose, you just take out $3,000 for that year, as I recall. But in
Yeah.
leverage, in real estate, we are able to leverage with the loan, good debt, we call it, right, with the bank. And the appreciation, the bank doesn't want any of the appreciation.